The market rockets higher into resistance. Is it all downhill from here, or can the bulls push through? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that if the bulls could take out yesterday's high, we'd be looking for a move into the 5990 to 6,000 area, and that's exactly what we saw as CPI launched higher, where they found their first resistance at 5990 and pulled back, then pushed up to the 6,000 area before falling off a little bit into the close. Now, the question is, can the bulls push through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the Nasdaq. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we will take a look at our custom indicator. If you are new here, we have created an indicator that works in TradingView. It is a day trading and swing trading indicator, and it is absolutely killing the market. So let's jump into the chart and take a look at that. Okay, guys, so here we are on the 5-minute SPY chart, and that's what we use for day trading. We also use this indicator for swing trading. I have several videos showing how effective and powerful it is, including yesterday's video. And we had another incredible day on the indicator. We had this launch up here in the pre-market before CPI, and sometimes it's really hard to understand where that initial move is going to top out, which is why having something like the indicator is so powerful. So what we're looking at on the chart here, this is TradingView. The indicator only works in TradingView, so you need a TradingView account, and inside of that account you need real-time data on the ES and the NQ. That is an additional thing you have to get in TradingView. It doesn't come with a standard account, so make sure you have that so your indicator works properly. And the reason you need that real-time data is in our settings. One of the things our price action indicator looks for is confluence between the ES, NQ, and SPY. If they're all moving in the same direction off of key support or resistance, it is very likely you're going to have a successful trade, and that's when we ignite a buy or sell signal. So if you don't have real data, this can cause a delay in the buy and sell signals coming up because the futures data is 10 minutes behind, and that can cause issues with the indicator. So make sure you have real-time data. Additionally, this indicator can be used on any stock. I highly suggest you use it on highly traded liquid stocks and not, small stocks that don't have a lot of option interest and don't have a lot of overall interest that's hard to get in and out of, and you got to overpay for things. You want to use this on things like NVIDIA or any of the Mag 7 or indexes or things like that. And all you have to do is when you go to, say, NVIDIA, you click on this box here and you change that symbol to NVIDIA. And then you would click on this box here and change the NQ to also say NVIDIA, because you don't want the market looking at the NQ and the ES when you're trying to trade NVIDIA. You want it all looking at NVIDIA, and that's how you do that. So you change those to the stock you're looking at. Otherwise, if you're trading on the SPY like we do, you want to keep it on the ES and the NQ as is, and the maximum candles is always going to be 2 here. So that's kind of the setup, and that's how you use it on individual stocks. We use the weekly for swing trading. We use the 5-minute for day trading. So let's look at our day trading results here. Market moved up, right? Sold off just a little bit into the close, back to bound to test VWAP up here, right at the top. A couple bars later, we get the sell signal. Now, this top happens to come in at a key level. That key level was 59.90 on the ES. I told you in yesterday's video that would be a very, very strong resistance level, and we'd look for rejection there. And that's exactly what we saw, and the indicator knew it as well, and that's why the indicator is so effective. It is price action. It understands where support and where resistance is. It sees the weakness here. It initiates a sell near the top, so you're not getting in late. You're getting in right off of the support or resistance, in this case resistance, and you're getting the top or bottom of the move. You can see here that we got in at around 592 or so, and they ran it all the way down here to 589. So about a $3 move down right off the rip here, right off the top of the move. Then this is also a key level because they came back to test the opening low. They could not get through it. They consolidated when the market detected weakness. When the indicator detected weakness in the market, it initiated a buy right off the low. So you're not getting in way up here. You're getting in at the bottom. Rocket ride to the top. This indicator is killing the market, guys. If you're not using it, I'm not sure what you're waiting for, because I give a 30-day money-back guarantee. I know you're going to love it. You can see on the screen, people are loving this indicator. You'll see more and more people later that say how great it is. It's helping traders. That's what I want to do. I love to help traders. I want to help you guys. And this indicator is killing. Now, this black line in the middle here, this is 10 a.m. Pacific Standard Time. We do not trade after that time as far as day trading goes because the market tends to get low volume and slow and choppy. And even though they continued higher off of this buy, these signals don't matter because after 10 a.m., the market's just not a great day trading environment. So that's why we have this black line here. You can see we had 2 great trades on the charts today and absolutely killed it. Now, again, like I said, 30-day money-back guarantee. If you want to get this indicator, there's a link down in the description. Click that link. It will take you to our website, okay, and it'll take you right to the indicators page. You'll click down here to get the indicator. It's $59 a month. Like I said, 30-day money-back guarantee. If you don't like it in 30 days, send me an email. Say, hey, it wasn't for me. I'll refund your money. We'll both go our separate ways, but I don't think that's going to happen because I think you're going to love it. It's a very effective indicator, and I think you're going to be really surprised at how nice, easy, and clean it makes trading. You don't have to look at 100 charts. You don't have to look at 100 moving averages and indicators and everything else and make it really hard. We've made it clean and simple to understand how to trade this market effectively. If you want to get a yearly discount, you get 2 months off. You also get a 30-day money-back guarantee on that. And down here, you can see what everybody's saying about it. It's absolutely killing. Guys, I want you to have it. 30-day money-back guarantee. Check it out. All right, now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And what I said yesterday was we kind of had a two-way setup here. 58.30 was our key level to the downside. Should they have broken that, we would have seen the blue box. And then the high from Tuesday was our key level to the upside, breaking back above that. Takes us to 59.90 to 6,000. And that's exactly what we saw. We saw that breakthrough, and we saw them move up here. The first rejection was 59.91. The high of the day was 6,001. So 59.90 to 6,000, tagged both of them, pulled back a little bit off of that. And so now what we have is a potential for the A wave here to be done. The pullback here is going to be important, and here's why. We now have 2 potential setups, one bullish, one bearish, and we're always going to have that, guys. If you're confused by that, you're not understanding key levels. If you've been to this channel for a while, you'll know that I always give 2 ways so that you can adapt and understand what key levels hold and break to make the markets work. And as a kind of example of that, you can see on the screen here, we were long all the way back here on the 13th at the lows. We were long off the lows. So we know what setups we're looking for and how to trade this, but I give you the key levels. This is free content. In my room, you get exact stuff and trades. In here, you get general stuff. Okay, so that's why you get 2 ways. I also give the key levels. When the key levels break, that's a good place to enter a trade or get out of a trade. If you were short, when they took out this high, you could have got out, or you could have got long and done really nice. And if you were long, you did great. We did great. We have a long that crushed, again, all the way back here off the lows, and we're all the way back, all the way up here at 6,000. So absolutely crushing long for us. Great trade for our group. If you want to be a part of it, you can check that out later. So our 2 scenarios are bullish first, A, B, and C for bracket A, which means it's A of circle A. Okay, this resistance area is very strong and generally should hold. Now, if this does not hold, we very likely squeeze up here to 60, 66 to this B wave high, 60, 65 to this high right here. And then we'll see what happens there if they get rejection or if they can squeeze through there. But I would suspect if we squeeze up to this point, we'll get a pullback at that point. So now we have a very clean area here, the 6,000, 6,010 area. If they break through that, then we're looking at 60, 66 next and a pretty direct move and a continuation of this squeeze. Now, what we would expect, what theory would tell us, and what general market dynamics would tell us is that this ABC hit resistance, and we should see a pullback here. Now, how this pullback works, or the structure of the pullback, I guess I should say, is what's important. If it's an ABC structure, so you get an A, a B, and a C like this, then we're looking higher, and we're looking to all-time highs overall. We would look higher first to this A wave, and that would be around the 61, 6120 area. Then you get a B wave pullback, and then C all the way up to 6,300. That would be the bullish path. And for that to hold, they really kind of want to hold. They really want to hold this 58.80 area. Below that, it starts to get a little bit dicey. They can come down and hold this low here at 58.50, but I'd really prefer they hold the very strong support here at 58.80. Assuming they hold that, we would be in a corrective pattern. We would be looking higher for this circle A and then B and C up. For the bulls, I'm sorry, excuse me, for the bears, that was the bulls. For the bears, We want this to be, or you want this if you're a bear, to be an impulsive move down. And the reason for that is off of the high, you'd be looking at A, B, and then starting C down in a much bigger corrective move that would move through the blue box and be much deeper. In that case, you'd be looking at 1, 2, 3, 4, 5 into the lows to get started. Then you'd look for a bounce off the lows and then the breakdown. So in this case, you'd want to see a 5-wave move down that challenges the lows. You'll very likely get rejection here, but it should be a corrective bounce. And then you'd look for another strong move to the downside that breaks through our blue box below and continues on in a bigger correction, at which point we'll have to see exactly how it takes shape, what the targets are, and what happens next there. We can't get too far along here as we are dealing in corrective structures and diagonals. So you can just get a million scenarios, and we don't want to do that. We want to take the most probable paths. And these are the two most probable paths. So again, the bulls want to see a corrective pullback, should we see a pullback. And they'd want to see a 3-wave structure that holds around 58.80 or so, 58.90, somewhere in this range, and then a strong move higher. Whereas the bears want to see a impulsive pullback to start a C wave into the lows, and then we'd look for a bounce and a breakdown. So those are the two paths that are the most likely. Should the bulls continue and we start to squeeze again 56, 60, I'm sorry, 60, 60, 60, 65 in this area. This top right here where we have our line drawn across would be our next level to watch. And then we'd look for turn down from there. So those are the paths that we're keeping in mind as we look at the market tomorrow. Key level to the downside and path would be 58.80. And then we'd want to see a corrective move as well. Over on the Nasdaq. Okay, on the Nasdaq, we told you they would, if they broke yesterday's high, they would likely go into that 21,400 to 500 area. They got right into 400 on the first move up, pulled back and got to 452 as the high, so came right into our targets as expected. Very nice move up for the bulls. Now we need to see the pullback, and it's the same story on the Nasdaq. 3-wave pullback into this area right here around 20,950. And they hold, then we're looking for completion of this A wave up to about 22,000, and then B and C up to 23,000. That would be our bullish path on the Nasdaq. Bearish path, we're looking for 5 waves down here. Remember, this would again would be an A and a B, and then a C down where we'd look for 5 waves into the lows, a corrective bounce, and then a bigger breakdown that breaks support. So those are the two paths, very similar. Should the bulls squeeze, then they're looking at this B wave high as well, around 21,890 or so. That would be our next target higher in a direct move. But I do think we should see some kind of pullback. And then again, the structure of that pullback is important. And then they need to hold support. Support, again, being around that 20,900 area. So very similar paths on both. That's very common. They trade in step very often. You would look for a strong move higher. And one thing to pay attention to is the RTY. If we are going to all-time highs, the RTY will likely lead. You might see it outperform very strongly. So if you are going to try to find a long position off a pullback, the RTY is a place to be, as the small cap should catch up in this move and potentially make all-time highs on the RTY as well. So just something, a little tidbit for you. If you are looking long, the strongest move should come from the small caps. And that's where you may want to enter your long as opposed to the ES or the NQ. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans. Both come with a 7-day free trial. This is where you get the trades. Okay, if you're not using the indicator, you get that long that we had from the 13th into today that absolutely crushed. You would get that trade in these rooms, and the environment in there is incredible. I want you to get in there and become one of our members. I want you to interact with the team, interact with PT and I. Make sure you love it. You get 7 days to make sure you love it before you ever spend a penny, and then you can cancel at any time. So if it's not for you, you just get out of there. You literally have nothing to lose by checking us out. We also have our educational material. We have our Elliott Wave for beginners and our advanced Elliott Wave courses. These courses are helping real traders understand the market in a way that makes sense, and it's helping them navigate these ups and downs that go against the 10-year yield climbing, that go against the dollar climbing, that make it seem like bad news is good news and good news is bad news, because none of that makes sense. Okay? In our advanced class, we go through the stuff we're talking about right now. We're going through the advanced fib levels. We are going through the diagonals, the double and triple threes, the flats, triangles. And really the big one is trading Elliott Wave, how to find these setups, how to know that why we got long on the 13th, knowing that that was a area where we should be seeing a bottoming action. This is an invaluable tool right here, understanding the setups and when to get into good trades. This is something that I think is worth the entire price of the course, and I think you really love. As you can see on the screen, it's helping our traders make money and understand the market. But I do understand that this is advanced, so if you are getting started and want to get in at the beginning, we do have our Elliott Wave 4 beginners course. And this course is helping traders understand the market in a way that makes sense. We go through all of the very starter things of Elliott Wave, how to understand why the market does what it does, how to find key levels, and how to make you comfortable in an irrational market. Remember, markets are emotional. The news doesn't matter. The news is not a thing. There's a reason that good news makes the market go down sometimes and makes it go up sometimes. It's because good news or bad news, it doesn't matter. The news is already priced in long before it ever hits a headline. The market is forward-looking, and Elliott knew that, and he knew how to find key levels, and that's what gives you an advantage. In this course, we have 25 videos. We have our introduction, where we introduce you to Elliott Wave, the expectations, the mindset, and the KISS method. We have our chart setup and tools, where we go through all the tools you need to use with Elliott Wave, why and how we use them, and the Elliott Wave 4 beginners area, where we go through all of the waves, the pivot, the corrective depth theory, the degrees of wave, everything you need to make sense of an irrational market, and how to find all of these key levels. The awesome thing about these courses is if you want to get them as a bundle, we give you $37 off, and you can get them both at the same time. But even better than that, if you want to get them for free, check out our membership plans area, as they are included in both of our rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through all of the charts, answer all your questions. It's about an hour long. We go through everything you want to know and give all of the trade setups and Elliott Wave setups that we need. We also give you the advanced course and the beginners course, all for just $49 a month. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room, but if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in my room, as well as the individual stocks, the futures trading, his income trading method that crushes the market, as well as his reduced risk binary method that gets you in at a cheap price and gets you big multiples on your money. And that's something you really kind of have to see to understand. And that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. If they squeeze, it's 60.65 is the next target. However, we are looking for a pullback off of this area. If it's a three-wave corrective pullback, we would look for continuation to the upside towards 6,100. If it is an impulsive move that comes back down toward the lows, we would look for a bounce and then a breakthrough to the downside that goes below our blue box and breaks major support. Over on the Nasdaq, same setup. If they squeeze, the target is 21,850 to 8 to 900. If they don't, and we look for the pullback that we would expect, you would get a three-wave pullback that needs to hold this 20,950 area, 900 area, and that would look higher towards 22,000 overall and 23,000 as the completed move. If they give us a five-wave move down toward the lows and a corrective bounce, then we would look for them to break down below the 20,400 level in a much bigger decline. Guys, that is your market update for today. I'll talk to you tomorrow.